So something else that corporations get, they get to deduct or immediately expense organizational expenses and startup expenses. So organizational expenses are things like the costs of organizing your business. Usually you don't get to deduct any items until you have actually started your operations. Like just planning your business, if you haven't actually started operations, you don't get to deduct any of that expense yet. There is an exception, though, with regard to organizational expenses. Those are the expenses that are incurred to set up the organization, so the C corporation. So if you have to pay an attorney to file the appropriate paperwork to set up the organization, you pay all those fees to the state in order to set up your corporation, that sort of thing. Then you do, within limits, you can immediately write off those expenses. Same with startup expenses. Startup expenses are more the things that you buy to get, like, not organizational expenses, but other types of expenses to get your business up and running. So if you have to buy supplies and things like that, those would be kind of startup expenses. So usually what you have to do is capitalize these costs, but there is an exception to that rule with limits. So corporations are permitted to immediately deduct organizational expenses in an amount equal to the lower of the amount of organizational expenses or $5,000. So from 0 to 5,000, deductible organizational expenses. So it's not a huge amount, not a big amount of money, but up to $5,000. If, however, the organizational expenses exceed $50,000, you've got a really expensive attorney, or you had to do a whole lot of stuff, then this amount that is deductible gets reduced dollar for dollar every amount over that $50,000. Up to $55,000, at which time none of it is immediately deductible. You can amortize it. You amortize it over, 6 years? 15 years, I'm sorry. I think it's 15. Yeah, 180 months. So the amount that you can't expense. So for example, if we paid $57,000 in organizational expenses, so what we're going to do is subtract, so this is not 57,000, sorry, that's not a good amount, 52,000. We can subtract the $50,000 max. So we are $2,000 over, which means we're going to subtract 2,000. We can now deduct 3,000. Immediately deduct 3,000. The rest of them, the other, $49,000 of expenses, we're going to have to amortize over 15 years. Okay. So again, any amount over 50,000 is going to be reduced dollar for dollar, and our limit, we're still limited to 5,000. That means if you have 55,000 or more in those expenses, none of it is going to be immediately deductible. Not saying that you can't deduct it. It's not immediately deductible. Otherwise, you'll have to amortize it over a 15-year period. Hopefully it's still recording. I've got low battery right now. Startup expenses are the same. This is when the business is not yet active or earning income. Expenses are not deductible, must be capitalized, and they are deferred expenses. So organizational expenses are different from the startup. Startup expenses, you still have to amortize those expenses. Corporate tax rates, like I said, that's super easy, 21%. It's just a 21% tax rate. ASU AMT, this is alternative minimum tax. This is a nightmare. This is where you have to, it's designed to make sure that corporations and individuals, it applies to individuals as well, at least pay a minimum amount of tax. So they don't take all sorts of deductions in order to get their tax down to zero. So what it does is you do your regular tax calculation, and then you do an alternative minimum. It's like an alternative world, bizarro world where you don't get a bunch of deductions that you ordinarily would get, and whichever one ends up with the most tax, that's what you're going to pay. So that's what they mean with the AMT tax here. I don't think you don't have to worry about that. Just know that the tax rate is 21%. Estimated payments, corporation has to make estimated payments. It is the lower of 100% of the tax due for the year or 100% of the tax due for the prior year. Okay, they're made in 4 installments on the 15th day of the 4th, 6th, 9th, and 12th months of their fiscal year. We don't have specific dates because remember, corporations can have different fiscal years. They can have a different tax year. If they start their tax year February 1st, then the 15th day of the 4th month is not going to be April 15th, it's going to be May 15th. So, and again, it's not really quarterly. 4th, 6th, 9th, and 12th isn't an equal, the individuals aren't 3 months apart either. They're not really quarterly. They're just estimated payments. What else do we want to say here? There are underpayment penalties. Of course, there are all sorts of penalties that are assessed. All right, we'll talk about net operating losses.